Hello investors, welcome to Simpli Stocks. In today's video, we will talk about a data center proxy business that has been trending for the past 1 month. Proxy businesses are those that benefit directly from the growth of a main sector, like automobile is a main sector. So auto ancillary or auto parts manufacturing companies are proxy businesses. If the auto sector grows, auto ancillary businesses will also perform well. So today we will discuss a similar company that is related to the data center theme. This company has entered into an exclusive partnership with a very famous US-based data center technology company, Vertiv. Under this partnership, it is manufacturing critical components used in data centers for Vertiv. These products are being manufactured in India for the first time, and this company has developed them through joint research and development arrangement with Vertiv. But before we move ahead with the business, as a very strict standard disclaimer, this video is strictly not a buy or sell recommendation for this business in any way. Our objective here is to help you understand this business model so that you can conduct your own further research. With that, let's get started. So the business we will study today is Aeroflex Industries. This company manufactures flexible control systems for steel, oil and gas, chemicals, ports, and other sectors. Now, what are these flow control systems? So in very simple words, in any plant, machinery, or industrial setup, if you need to transfer a chemical, liquid, or gas from one place to another, you require special hoses, bellows, and assemblies that provide a channel for that liquid or gas to pass, and they also help to control its flow. Aeroflex has strong expertise in this business. It is the largest exporter of flow control systems from India, and they are also among the top suppliers domestically. And because of this expertise in flow control systems, Aeroflex has now entered the data center business. They have partnered with Vertiv, which is a major US company that provides technology and infrastructure for data centers. They have started manufacturing parts for liquid cooling technology. Now, before coming to how big this opportunity of liquid cooling technology is and what its scope looks like, let us first quickly understand what actually is this technology and why it is needed. And then we will come to the term. So, data centers contain numerous servers that perform high-speed computing and processing. This heavy processing generates a significant amount of heat. Previously, HVAC systems were used to manage this heat and cool data centers. However, due to AI application and hypercomputing, computing intensity has increased significantly. Plus, GPU density per rack has also increased sharply, making air cooling less viable. Therefore, running air cooling systems 24/7 will result in very high power costs. Therefore, data centers are now adopting liquid cooling systems. In these systems, coolant is delivered through hoses or pipes directly to server racks, which keeps them cool. Nowadays, approximately 99% of data centers, new data centers, are using these liquid cooling systems. So, tracking the growth of the data center market, the liquid cooling solutions market is also growing very fast. The total addressable market or TAM for liquid cooling is currently around $3 billion. It is growing at a CAGR of about 33%. And at this pace, over the next 6 to 7 years, the TAM is expected to become sevenfold to approximately $21 billion. And if we calculate the growth rate specifically for the Indian market, it will be even higher because the Indian data center market is still in its early stage. Now, as for Vertiv, it holds at least 25 to 30% global market share in the liquid cooling segments. And as more data centers will be set up in India, Aeroflex through Vertiv will act as a component supplier in these products. Aeroflex also has a moat of technology which provides a competitive advantage to this company. The company has 15 to 20 years of experience in flow control systems and has developed several proprietary software tools over time as well related to flow control systems. It will take years for a new player which is entering this segment to develop such technology. And technology is only one part of the competitive edge. Due to this partnership with Vertiv, Aeroflex has also direct access now to large customers because, as you know, this is a B2B product, right? You do not directly supply to data centers. There is technology on the top of it. Therefore, such partnerships are extremely important. There are only about 5 to 6 companies globally working on liquid cooling solutions such as Vertiv, Schneider, and a few others. Thus, this partnership with such a player is very critical and important. Therefore, Aeroflex is also going very heavy on this opportunity and is expanding capacity for skid assemblies. Skid assembly is essentially the whole system or setup for the flow control system. Currently, it has capacity to manufacture 2,000 units, which it plans to increase to 15,000 units. Each unit has a realization of about 3 lakh rupees. So at peak utilization, Aeroflex can generate sales of around 300 to 350 crore rupees from this segment. And management has stated that in 3 years, 1/3 of company sales will come from this data center division or segment. And since this is a high-end engineering intensive product, margins will also be higher here. The company currently operates at 20 to 21% EBITDA margin. But in this segment, EBITDA margin can be even above more than, let's say, 30 to 35%. Therefore, we will also see margin expansion for Aeroflex as well on a consolidated basis in the future. Now, a humble request, just before moving forward, if you are liking this video so far, do give me a thumbs up. Also, you can subscribe to our channel, Simpli Stocks, where we bring multiple such videos every week. Honestly, your likes and subscribes are our only motivation so that we keep bringing such high quality research to you for free. So do like this video and yes, also subscribe to our channel. Now, based on management's guidance, let us quickly do a valuation exercise for Aeroflex. So they have given a sales target of approximately 1,000 crore rupees in sales for 3 years from now. Compared to the estimated sales of this year, that is FY26, this implies roughly 30% CAGR sales growth. The company has 4 to 5 business segments, or say product segments: hoses, bellows, miniature bellows, assemblies, and skid assemblies for liquid cooling systems. Now, combining all of these segments together, company can generate 1,000 crore rupees in sales at peak utilization, as I told you. If we take a blended margin assumption of EBITDA margin assumption of 25%, which management has also guided, the net profit margin can be around 20%. Therefore, 3 years from now, Aeroflex net profit can be around 200 crore rupees. Here, if we assign an exit PE of 40 to 45, basically we are saying that 3 years from now, Aeroflex can command PE of 40 to 50. So, as per this exit PE assumption, the market capitalization of Aeroflex can be around 8,000 to 10,000 crore rupees. These are the basic assumptions. Again, a very strict standard disclaimer. These are my personal calculations and assumptions. This is not a buy or sell recommendation or price prediction at all. The purpose of all of this exercise is to help you understand how you can use your own exit PE scenarios to value Aeroflex yourself. And it completely depends on you whether you want to give an exit PE of 35, 40 or 50 3 years from now. Personally, I am confident of 50 multiple exit PE because I believe the data center theme will trend strongly in India 1 to 2 years down the line. Just like we have seen with defense and aerospace companies, data center proxy businesses, especially those with limited competition, may also command premium valuations. And if you see, even today, Aeroflex trades at a premium valuation. So assuming 40 to 50 exit PE multiple, we are looking at a 40 to 50% CAGR type opportunity in front of us. So it is a good starting point for further study. Plus, the valuation trigger for Aeroflex is that 2 to 3 years from now, its data center business will mature, meaning it will become large enough to meaningfully contribute to overall revenue. From that point, company's growth can accelerate further. Currently, skid assemblies is indeed a high growth segment, but because it is new, its contribution to total revenue is negligible right now. No matter how good growth is here today, it does not significantly impact overall consolidated growth. For example, Aeroflex has received only 2 orders for skid assemblies so far, valued at less than 10 crore rupees. Therefore, as the size of this high growth segment will increase, its share in total revenues will go up. Then consolidated growth will automatically get better, and there is a chance that Aeroflex can report sustainable, consistent growth over the long term. So we can say that 3 years from now, Aeroflex can move entirely to a new growth orbit. One more trigger for Aeroflex is that liquid cooling is a technology that can have multiple other potential applications too. The technology itself is just 4 to 5 years old. Before that, most data centers were air cooled. In the future, this technology can be used for cooling EV batteries and semiconductor chips too, among other applications. So this is another trigger that can unlock several more sectors for Aeroflex. But until the skid assemblies business scales up, the risk that you have to track is the performance of Aeroflex's legacy industrial business of supplying hoses, bellows, etc. Because since this is a B2B business, if there is an economic slowdown or there are issues in end sectors, for example, a down cycle in steel sector, that can negatively impact Aeroflex's results. So this can create volatility in the medium term for Aeroflex. And as most of their business comes from exports, that to a large contribution from America. So when tariffs were imposed, their business was affected. So that can happen again in the future. You can see that from 9 months of April to December, sales grew by only 10%. However, now that tariff uncertainty is gone, Aeroflex should do better. Additionally, they will also benefit from the free trade agreement between India and Europe. They face significant competition from Turkey. So the FTA will help by removing duties on their products in Europe. This will reduce the price differential. But ultimately, you have to track the progress of the skid assembly business, and you have to maintain a long-term perspective as it will take time to scale up. So you can look into Aeroflex independently once. It is not a complex business, although it is connected to the data center theme. I hope this video has helped you to understand the business model and its products in very simple terms. And if you found this video helpful, do give me a thumbs up. Also, you can subscribe to our channel Simpli Stocks. Our purpose at Simpli Stocks is to simplify business models for retail investors so that we can provide the same level of research which is available to mutual funds and ACE investors. If you support us by liking this video and subscribing to channel, we can continue bringing more such videos for you. So I will see you in the next video. Happy investing.